So
Yeah,
we'll have, very small introduction in 30
and
seconds. Just
yeah,
thanks to sponsors, no need to name each and every. Just
okay.
30 seconds. Okay, and in 10 seconds we are going live.
Welcome back to vypaarjagat TV, and we have a wonderful keynote speaker with us. And but before starting the session, we would like to thank all our sponsors. Sublimis, we thank Campus Dean, Obesity, Peers Board, and we thank Inciting Minds, Newswire, Cotton India, of course, our very own 1 million entrepreneurs international forum, and Vyapar Jagat TV and Swagger Unit. Thank you, our sponsors, for supporting us in our program. Thank you. So now we have already spoken on the things, 10 things which where you do not require any talent. And that is the inner side, the inner body of the inner body, which has to be purified before starting anything else. The outside body. Now we have with us Mr. Arijit Bhattacharya, who is a serial entrepreneur since 1998. He is an angel investor. He is a public speaker. He's a business matchmaking expert. He's a government advisor. He's an artist, author, community builder, and the list goes on and on. So let us hear from him what he has to say, because being an angel investor, he would be guiding us and the entrepreneurs here how to create an investor ready company. He would share and uplift as deep tech startup. And before that, the greatest enemies of equity investors are expenses and emotions. So keeping that in mind, please welcome Mr. Arijit Bhattacharya.
Thank you for the lovely introduction, Jalpan, and it's a pleasure to be here and definitely
Sir,
invited by
sir কেমন আছে?
all good. Everything is fine.
So,
Kemche,
sir, sorry?
Kemcho.
હું મજામાં છું sir. আমি ভালো আছি. ধন্যবাদ to be here on the show. And
Pleasure.
please put your limelight over this topic, because this is where everybody lags behind. Over to you, sir.
Thank you so much. So what I can do, I'll be more than happy to share a little bit of experience which I have gathered in last 24 plus years, running multiple businesses, starting companies, and definitely raising funds, investing in startups worldwide. What I'm going to do, I'm going to share a little bit of theoretical aspect and practical aspect, how things can be done, and eventually would take few bit of example cases from at least 3 to 4 countries wherein the investment actually happened and how these things can happen. Well, what I'm going to do, I'm going to bore you for next half an hour because I feel that my speech is about 30 minutes. I hope my screen is visible to all of you.
It is visible, Arjit.
Super. Well, I'm coming from a very traditional Bengali medium school, and I found that English has got 26 letters. But in India, if we look at our normal usual languages, we have more than 50 plus letters. So I felt that to play around with this language called English, which is a common medium for all of us. So bore in my dictionary is beginning of re-engineered entrepreneurship. And when we talk about entrepreneurship, I'm talking about people who are making disruption, who have created a solution which is not there or never thought of. I'm talking about innovations, and I'm talking definitely about raising funds on innovative products. Well, because my time is limited, I'm going to talk a little bit about what is entrepreneurship first. Entrepreneurship for me, as a quote, is riding a tiger. When you start your journey, you just adopt a cub with the intention that eventually it will grow and it will grow big. When it is small, you start feeding it with milk. But eventually when it is growing, you need to understand that now it doesn't need milk. It is looking for raw meat. And that raw meat is money. And when you're riding on the top of it, if you stop, the tiger will try to eat you, because if it is hungry, definitely it needs to feed. That's your business. So in your business, if you don't have your clients or your partners and you're lacking to do that, business will try to kill you. So either you need to stop your business or probably you need to kill it. And that's the risk each and every time whoever is doing business is doing it. And when I heard about the name called vypaarjagat, in Hindi is the world of business, if I'm not wrong. So when we are talking about this world of business, it is important to understand the art and science of making money, nourishing it, and how to raise it. शायद हम लोग बहुत परेशान होते हैं कि यार इन्वेस्टर कहाँ से मिलेगा? How can I get investment in my company? How can I exactly snatch a couple of angel investor? Or what is VC fund? If I can get a VC in my life will be beautiful. Well, definitely there are certainly different kind of investors available. One kind of investors are angel investors who are coming in the early stage of your business. Sometimes in the idea stage, sometimes when you're making a little bit amount of money, sometimes when you are in MVP stage, the minimum viable product. Each and every case, I would love to give you one very simple tips. Investment don't happen in a normal social media chat. Let me be very honest with you. My LinkedIn is blasted with messages looking for funding. Well, definitely you can blast that message. I know that for sure. You're doing it for hundreds of other investors. Completely fine. But you need to understand, giving money and getting money is just like having someone for the rest of your business life. It may be not for your personal life, but when you're handshaking with an investor, they are investing in you, not in your business only. First and foremost tips, try to create a groundbreaking team. Without the team, it's very difficult to convince any kind of investors. Now, who are these VC funds? Who are these private equity players? Who are these family-run funds? What are the different kind of investment that is available? Who are these bank guys? How exactly you are going to get some kind of debt or loan or probably equity investor? Well, angel investors are those kind of people who usually try to invest their own hard-earned money. Either they are doing a very amazing job in some company, in a C-level position, sometimes in a president's position. They have extra cash, they want to multiply it. Remember, every investor wants to multiply their money. They are not doing philanthropy. Philanthropical investment are different. But here, we are talking about running something together. So definitely, if somebody is investing money in your business or in you, they are looking for a return. So it is important to understand how you are going to give the return. And I love this slide. Always I love this slide. When people say that you are small or probably I am small, I love small, to be very honest. Again, that English dictionary for me, for small, is smart, manageable, adjustable, and of course, logical thing, which can go towards a larger vision. Coming from that particular part, when you say that, sir, I have an idea, can I get an investment on my idea? Well, in my words, great job, you have an idea. But how about you start something? If you don't buy your own idea and your own concept and you can't start something on your own, you feel that somebody else will actually believe that you can do with their own money. It's very difficult to convince someone unless you have a patented product which is already there or you have already applied for the same. So if you have that, that means that it is not there and maybe somebody can make money out of it. That's the only simple case that you can have when you are in idea stage and you have applied for a patent or you have got it. Then maybe it is interesting for an angel investor or maybe a VC fund to take a look at it. Well, I'm going to give you a small bit of understanding what are the kind of investment that has been done so far so good. These are few of the companies wherein either I started or I co-started, or sometimes I invested as a humble investor. Don't feel that if I'm investing, that means that probably I'm the next billionaire. Not like that. It's probably the investment that I'm doing from Almighty. It's all about taking all the gratitudes and all the good energy that is floating in the universe. And with that energy, probably I'm doing a little bit of small stuff in the vast universe. Most important part when you're raising capital. Let me take you to a journey of investment. Probably that will help a lot of you. As you know, angel investors, I already spoke that they usually come in the first initial stage of your company. Sometimes angel syndicate also comes into that stage. Who are these angel syndicates? Group of angel investors who wants to put money as a community. Well, it can happen as a group of maybe 5 or 6 people who wants to invest into your company. In that case, definitely multiple number of people can bring not only money, but they can bring their network and their business connect and the knowledge. The best kind of investor that you can get in your business is not a sleeping investor. What is sleeping investor? Somebody saying that, well, I have got piles of money. You take this, you grow and give me a return after 5 years. Those are kind of people who don't want any kind of nitty-gritties, or maybe they don't want to interact with you during your business journey. Second kind of investor, they say that, okay, fine, you have the money, plus I'm going to give you the market connect. I'm going to give you my network. I'm going to open my knowledge to you so that maybe in a month you have an interaction. They open up the market for you. They ask others to give you business. That's one of the best kind of investor that you can get in your business. The third line is the venture capitalists. VC is basically a firm who connects, communicates, and get HNI into their network. These HNIs, they commit a certain amount of money. And as a VC, there are 2 different kind of segment. One is the GP, another one is the LP. GP is the guy who is managing the entire fund. So that fellow is going to cross-check, understand, deliver with your startup. They are going to check and verify whether you are investable or not. Now, for that gentleman or for that lady, it is important to multiply the money of these HNIs. So you need to understand, as a VC fund, if they're investing in 10 different companies, they need to get success from at least 2, so that all the money that they have invested in all these 10 companies can get a multi-folded return. Now, this is a very strategic decision. From a VC perspective, if some company is not doing very well, then they need to take a sequential decision. Now, this is really, really important. You need to understand one thing. When you're trying to get money from someone, from some investment body, you are going to get the money in crunches. For an example, if you're looking for 1 CR as a funding, it may happen that you're going to get it 20 lakhs in the first stage. Depending on the stage, maybe after your performance, you're going to raise another round of 30 lakhs from the same group of people. It may happen you're going to get everything in one shot, one go, depending on your business structure. So you need to understand, if your business is not doing well, raising capital after capital is not going to help you. And I'm not a firm believer and lover of valuation game. I'm a lover of value creation game. So definitely, if your business is doing well, there will be people who will be saying that, okay, fine, let's join hands. Let me put money, let me put network. So it depends on the entrepreneur how they are going to take it. Many times I have seen several people, they ask me that, sir, we are not looking for money. We're looking for your network. We are just looking for your knowledge. We are just looking for the way you run businesses. Please be in our board. That creates complete different level of confidence from both the parties. Now, when we are talking about all these VC funds, angel investments, we have another party, banks. Definitely you can get loan from the bank, but sometimes these loans are with very high interest rate. In these cases, there are private players who put money as a debt into your company. They work with a range of 4% to 8% yearly basis percentage. So these guys are also available to raise capital. But from these guys' perspective, you need to understand collateral is a challenge. So they go for a lot of due diligence. So understanding your business logic and how you can create your company investable, I think that's the most crucial part. How we can do it. First and foremost thing, who is your first customer? Try to get a customer on board whom you can showcase to people. Maybe a good name. It doesn't matter how much order you have gathered, but if the name is big as your consumer, as your customer, that you can utilize to say, hey, you know what? I'm working for probably Intel. Hey, you know what? I'm working for the best top 5 companies in the world. It doesn't matter how much order you have got, but this name is going to give you a lot of other business. It's a very simple tips. Well, a simple to-do list. What I'm going to do, maybe after my speech is over, I will try to share this PPT to the organizer. Maybe that will help a lot of you. First thing that you need to do, solve your own problem. Second, create a groundbreaking team. A solopreneur is basically a person who is earning their own bread and butter. There is a huge difference between employee and team. I was listening to our boss speaker, and I can tell you something from my experience. When you're making a team, these guys are working with you. They are not working for you. Employees are working for you. They are there for salary and recognition. Your team is the group of people who are building the company together. They are not there for only money. Of course, they will draw some amount of salary, but I will tell you a real life situation from my own life. Once upon a time, approximately 12 years back, there was a very bad situation in our organization. So starting a company back in 1998, which is eventually a game development studio in India, was not that easy. Trust me from the experience. It was not internet days. It was PC days, and internet was a luxury. We used to have a hard disk of probably 10 GB as a size. Internet Explorer was the only Explorer we used to use. After running the company for 8 long years, I had a very bad situation. Well, the situation was that I was unable to pay salaries completely to the employees because multiple number of our clients, they didn't pay us on time. And that became a gap in the company. 4 or 5 of those group of people whom I cherished as a student, and they became eventually my team members, 4 or 5 of them, they said that, sir, we are not looking for salaries. You have been taking care of us for the last couple of years. And we can see the situation of the company. They worked with the company for next 3 months to build it once again. That creates a confidence level and strength of an entrepreneur, and that creates a great team. Eventually, when the company started doing well, these guys became part of the company. Until date, they are with us. Several of them are holding a leadership position, C-level positions. So it depends how you treat a company. Is it your own baby, or you just want to use it maybe as a company to get salaries? Well, both are acceptable. There is no problem in it. But to create an investor-ready company, you need these kind of people who are with you in your board. I call them as rhino, swan, tiger, owl, snake, and elephant. Maybe in some time, I will explain that, maybe in some next speech if it is there. Well, of course, create a great relationship with your consumers. Be very, very flexible. Be honest what you say. There will be competitors in the market. And believe me in this, they will do whatever they can do to create a different name for you. Cherish that. If your competitor is talking something in your behind, that means you are doing good. Definitely cherish that moment. And don't fear that with those kind of words, somebody will say no to invest in your business. I have seen multiple of such kind of businesses who raised funds after having so many competitor analysis and so many of those words in the market. Few tips. Is your product market ready? If yes, can that business get at least 10% of the market? Now, when I'm talking about market, kindly don't create a report with a Google data that this is the entire world. I'm going to grab the world with my own vision, which is acceptable. There is no question about it. But if we are really serious talking about raising funds, let's talk about the 20 kilometers range within your own office area. Can you get that market's 10%? If yes, definitely multiply that with next 100 kilometers. If your own gut feeling says that, yes, you can do that, make that report from your own mindset. You really don't need to rely on any kind of marketable data. We all understand this. We have people in our funding companies who are market analyzers, who understand all these kind of nitty-gritties and volume. We don't need that data. We need the honest data from you, what you can do. Yeah. What is your target customer groups and how exactly you're going to convince your potential customer? We get a lot of pitch deck, I'll be very honest with you, which says that with those much amount of budget, marketing budget for social media, marketing budget for real media, marketing budget for maybe PR media, we are going to grab the customers. Guys, those are PR activities. Those are leads. Those are not customer. If you get 1 million download of your application, that's not your customer. That's your user. Customer means who is paying you money. It can be a small amount, but from investor perspective, we need to understand how you are going to get those customers. It cannot be done only with leads. Those are just lead. In management terms, sometimes we call it cold lead or maybe hot lead. Well, try to give that as an answer. And if you have existing customer, the question is how you can multiply that customer. Do you have a channel or do you need help? Be honest in this part. Say openly, well, I know that what I can do, I have probably have got maybe 20 of the consumer base, but I don't know how to multiply it. I need professional help in this. And for that, I'm looking for money to hire a couple of professionals. And these are the name of these professionals who are willing to join me, but I don't have money to pay them. Be honest in that. We can then understand your appetite of growing things. Yeah. Is your market, is your product a market fit? Is it like you are the only one who started this? Then grabbing the market would be a challenge. If it is not there in the market, educating the market would take a different amount of time and money. Please do understand that. So when you're pitching, when you're creating some kind of business structure and you say that it is not there in the market, great. But you need to understand how much money you are willing to raise and how much equity you want to dilute. If the market says that it is not there, but there is a demand, great. But if the market says that it is not there and the demand is not there, you need to create that demand. That means you need to pumping a lot of money into this. If you are in startup space, like maybe in your 6 months or 1 year, you don't have any prototype, you're trying to get some investor, please, my humble request would be create at least a prototype. How you going to do it? Please, come on. You are an entrepreneur. You have to do things. Entrepreneurs do things despite of the fact that what are the kind of challenges that they face. As an entrepreneur, when you go to sleep, you're in bed, you put your head on the top of that cozy pillow. I'm sure that there are thoughts which you can't explain and share to others. It is only with you. So with that kind of approach, with that kind of strength, you yourself need to come out with this situation and say that, well, fine, I can create a prototype and maybe I need a support and connect in some local university or maybe some group of people. And so I'm not looking for fun, but if you can kindly connect me with those group of people, it will be great. Be humble. And with that note, if you are connecting with maybe an experienced business person, it's not mandatory that you are connecting an investor. Maybe a serial entrepreneur, maybe a senior most business person, they usually have a helping hand. With that connect, if you can create an MVP, what's the harm in it? Well, there are a lot of things, but I have seen in visiting cards, well, nowadays I don't use visiting cards, but I have seen visiting cards as a startup, they write it as CEO in their visiting cards. I have another way of explaining it. In my dictionary, it's not Chief Executive Officer, it is Cash Extraction Officer. So if you're a CEO, you need to understand how to extract cash from the pocket. Well, when I'm talking about all these kind of aspects, how exactly a company can have a valuation method, or definitely a pre-money valuation plus the investment amount makes a post-money valuation. This is a complete different subject of discussion. Maybe we can do it later on. How you can compute your valuation, this is more important part. If you're making a deck, kindly take a note. There are multiple different methods, definitely. If you are a profitable company, there is a method of PE multiple. If you are making loss or maybe a fluctuating profit, you can go for a PS multiple. There are a lot of other methods like subscribers, number of users, good team members, discounted cash flow. Well, there are other methods like, of course, backward method, which I really, really love. Now, when I'm talking about all these kind of valuation, let me tell you real life 3 different situation from my experience. Well, as you know, I'm founder of World Leader Summit, and definitely I run another amazing platform called Entrepreneur Face. So Entrepreneur Face is basically a platform which gives opportunity to the startups and SMEs and MSMEs to create their deck, to create their business plan. And of course, we raise fund for them as a dedicated company. While doing all these activities, last year in March, we did an investor roundtable in Dubai, and we brought in 10 different investors from various different countries and selected 10 startups from 10 different countries on 10th of March. The concept was 10, 10, 10. And we did that round, and before going that round, we have been filtering startups from various different parts of the world. It was probably more than 150 applications that we got in 2 months down the line time. And I was all in to raise capital for these startups. One of them, they used to run a very traditional business. They said that, Arjit sir, we are running an oil and gas station. Along with that, we have a cafe. How can we raise fund? We are looking for $1 billion. Well, the answer was definitely $1 billion raising was not that easy. But what we did, we converted that entire business to create an ecosystem with blockchain. Now you get a shock. It was a oil and gas station, and I'm talking about a blockchain-enabled ecosystem. What happened in between? Well, we converted that entire business into such a model. As a consumer, when you drive in to that gas station, AI camera will detect and understand your face, and it will understand how many times you are coming into that station. A blockchain-enabled ecosystem will generate your own unique key. So every time you consume, it calculates how much money you spend and how much miles you usually drive, and what is your consumption level. Do you buy water? Do you buy food? Do you buy a book? Do you spend time in that gas station? That creates an analytical atmosphere. And it is important for any government to understand the consumption power of their locality, or in Europe, they usually take a car to move from one country to another country. So it is important for them to understand that entire ecosystem. Now, for this gas station guys, they said, oh my God, now we are creating an ecosystem. I said, yeah, when you're raising funds, you need to be innovative. And that is one of the best cases that we did in Middle East to raise capital for these guys. Second example, I would love to give another example who started in some part in Asia, wanted to create a robotics factory. This is in a different level altogether, definitely in deep tech. Now, this robotic factory, they don't want to create a normal, simple robot, which is line following robot. They wanted to create industry implementation robotic factory, which can plant solar plants in an automated way. This is huge. They have been looking for a guide, or probably a person, or probably a group who can fund the entire project. These guys, they raise funds from one of the VC fund based out of Asia. Because of India, I can't share a lot of details, but this is interesting. These guys only had people and mindset, capability, no existing setup. What they did, they find the best matchmaking experts from the industry, created the entire pool who would be their target customer, in which countries, and they started sending emails, started communicating with the potential consumers, and started getting interest level from their would-be consumers. Now this situation became really rosy. These guys were able to convince several different HNIs to set up that plant and getting a debt from the local bank with a very low interest rate, because one of the investor was one of the director of that bank. Now, what we learned in this story, it is pretty simple. If you have an idea and if you can work smart, you are able to connect with the local investors who really wants to multiply their money. Now, this slide I'm showing you while I'm sharing two different example cases can probably give you a little bit of idea. In this slide, maybe you can see, you can match make the purpose of your equity, where you need that, what kind of funding you can get, and what kind of purpose-driven funds are available. I'm going to share you a little bit of structure for a slide deck. This is a recommended slide deck. Kindly don't create a 20 slider or 100 slider to send asking for funding. Trust me on this, even though we have people, it is very difficult to read a 100 slider as a fund. It is very, very difficult for any fund to understand it. Try to concise your entire structure into 10 slider. Number one, a call to action, what exactly you want. Number two,
Rijit,
yeah.
I'm sorry, I'm interrupting in between, but let's try to conclude, as you know, the next speaker is in the room.
Sure, probably I'm taking 2 minutes to finish.
Sure, please. Thank you.
Done. Do you have a solution? Do you have a business model? Do you have an underlying technology? Probably you can read it. And definitely last but not the least, do you have an amazing team who can support that entire concept? This is, I'm talking about basically a recommended deck to give a teaser to the investor. You really don't need to send the entire financial details. If the investor is interested and they are looking for that financial details, feel free to send it to them. I guess I'm taking a lot of time. I'm really sorry about it, but this is what I always believe in. Startup is not about building a 10x valuation. It is all about creating a value 10x better than anyone else. And that's the journey probably we all are doing. Thank you so much for inviting me, and it's been a pleasure.
Thank you so much, sir. A lot of gratitude to you on sharing your knowledge, and it does make a sense how to prepare a projection when you are going to the investor, how to approach them. And I basically loved the CEO elaboration of cash extraction officer. So this is how we had a lot of knowledge by Arijit Bhattacharya here. We are very grateful to him for being here. Thank you, sir. Thank you so much. Keep sharing your knowledge with us and the audiences who's watching this show and who is even watching it after even watching it offline or online. Even they are, when we are not live, these videos will be shared on our TV, vypaarjagat TV. So do subscribe, keep liking, and do comment your questions, which we will be diverting to the speakers, to the keynote speakers, and you will be getting your answers there in the comment box. Thank you, everybody. Thank you for being with us. Dhanyavad.
Arijit, thank you so much, and I'm really sorry, man, because that we are having this short time, and I think you have a lot of things to convey and very powerful content. I think a lot of startups are even making these mistakes, and this is something which is basic. I think every startup, those who want to raise fund, these are the kind of thing that they should have in mind, and I'm sure this session will help a lot to them. Thank you so much, Arijit, for joining and sharing everything. Thank you. All right, we are offline now, and yeah, Arijit, I'm really sorry, man. I had to interrupt.
This is fine. This is completely fine. I understand you are in a.
Because what happens is, when we are, so the first session got delayed, and that's how you got lesser time. And because of that, now the next speaker also will get, because we have continuously 4 keynotes.
No problem at all. Don't feel that. You are doing a great job. Please.
I was diving into your session. I actually was drawn there.
Pleasure. Pleasure, please keep in
All
touch.
right, thank you so much.
Together.
And yeah. And I request Amit Kumar, our next keynote speaker, to start the video, and let's go live.